Welcome everybody, and thanks very much for the introduction. A really great time to be hearing about the story of Talisker and our Braylorn flagship as we're looking at all-time high gold and a company that successfully made the transition from explorer to developer into producer at all-time high gold. Our vision as a company is very clear. We want to develop multi-assets or multiple mines by developing district-scale gold belts, leading to the production of in excess of 200,000 ounces of gold annually. Our mission is to achieve this vision within the next 5 years. We're well underway with our first mine, the Mustang mine, already in production, and we're in planning to develop our second mine within the next 3 to 4 years, the Olympus mine, both of which will achieve 100,000 ounces production each to achieve this vision within the next 5 years. Part of our strategy as a company has been relative to where we're located in Canada. We're located in the south central part of British Columbia in Western Canada. Vancouver, that you can see, is in the bottom left-hand corner. Our project is about 3.5 hours drive from Vancouver. Major highway access. So very abundant and seamless logistics. In the valley where we're located, there are 3 hydroelectric plants. In fact, about 15% of British Columbia's electricity comes out of the valley where we're located. So much of our strategy was to partner with existing producing facilities, so avoid a large upfront capex requirement to build our own mill. Our first agreement was with New Gold at the New Afton facility, Canada's largest underground block cave mine. We also partnered with Nikola Mining to toll mill our ore, where we're currently shipping and producing on a monthly basis. Recently, we finalised an agreement with Ocean Partners, a global metal trader, to purchase 1,500 tonnes per day. So we have trucking and rail facilities to transport this material down to Vancouver and then to truck that ore away. So this is a very innovative approach to being able to lower capex and reduce permitting and construction timelines to capitalise on all-time high gold. Some of the largest mines still operating in this region. Highland Valley, Teck's giant copper mine, Canada's largest copper producer. Hudbay's Copper Mountain, a 65,000 tonne a day producer. To the north, we've got Taseko, we've got Mount Polly, the Caribou deposit just coming online. This is the heart of mining in British Columbia. We don't have to build a road across a glacier. We don't have to put in 100 kilometres of power line. We're already connected to all of these facilities. Access to a very strong mining, skilled workforce out of Kamloops and Vancouver and Kelowna. Finally, a favourable operating climate. We're not thousands of kilometres north. We're very close to the southern part of British Columbia, in the rain shadow of Whistler, if anybody's a skier. Only 2 to 3 feet of snow per year, so we can operate all year round. And all of this has allowed us to bring our project into production very quickly. Stepping back, looking at our share structure and market capitalisation. A market cap between 200 and 250 million. 170 million shares out, about 200 million fully diluted. Cash position, about $34 million Canadian in cash. We have a working credit facility on top of that of another 35 million, available, about 70 million fully available. All of our warrants and options are currently in the money. Looking at our share performance, you see the jump since we announced our first gold sales in September. Stock price has gone up 300% in the last couple of months. As we continue to increase our production and meet our targets, we expect this to continue over the next year to 2 years as we increase our production to 100,000 ounces. We're roughly 50-50 institutional and retail shareholding. Main institutional shareholders are Franklin Templeton at 9.9, Arbor Partners also at 9.9, the Phoenix Gold Fund out of Singapore, again just under 10%, and a series of other well-known funds, Equinox Partners, the Gold 2000 Fund out of Switzerland, and the Quaker Family Office. So very strong institutional shareholders, retail base, about 50% of high net worth, and long-term institutional shareholders. Insiders, ownership there mainly led by myself. This is my retirement fund, so we've got to make this work. A quick look at what the last 5 years have consisted of for Talisker Resources. Nearly 200,000 metres of diamond drilling. Our maiden resource, just under 1.7 million ounces. Finalised our mine permit amendments, our portal development, decline construction, about 600 metres. Secured our key financing, finalised our First Nation production agreements. This year, finalised multiple milling contracts, the highlight of which is the 1,500 tonne per day with the global metal trader Ocean Partners. Finalised our trucking agreement, which is a joint venture with our First Nation partners. Completed all our access development, started mining and sold our first gold. All of this achieved within the last 5 years, where most junior companies are still putting drill holes into things. Talisker Resources is a company that delivers on its promises. And we've delivered to the market every milestone that we've set over the last 5 years. And we believe with our future growth plan over the next 5 years, it will deliver these as well. Next year, we're looking at a resource update, adding another 800,000 to 1 million ounces, and an economic study incorporating our 2 mines, which will both have a 10 to 15-year mine life. We'll be ramping up our first mine to 500 tonnes per day, installing new all sort of technology built here in Germany at Tomra that will allow us to reduce our waste by 50% and double our grade. We're currently a top 5 in Canada with grade. With all sorting technology, we will become the highest grade gold producer in Canada. We'll be finalising our design of our on-site mill, so we're looking to transition to our own milling facility. And over the next 3 to 4 years, we'll be permitting our second mine and our mill to bring that into production in 2028 to 2029 and achieve our vision of being a 200,000 ounce producer. This is our first year production plan. Most of this has been done. The gold are our access development levels. The blue are our stopes. We've developed access on 6 levels and are actively mining this and producing the concentrate that you can see in the photo on the right-hand side. We produce a gravity concentrate, very high value, 40 to 50% of gold. Percent. Not grams per tonne. The concentrate varies between 70 and 100 grams per tonne, so very high value material. Next year, we're developing across to the second mining area, the Braylorn West area, with the 560 metres worth of development. We'll be developing 2 spiral declines to allow us to access a lot more material a lot quicker. There are 5 ore bodies in that area. We'll be developing 20 working faces. So we'll be able to extract a lot of this material through the Braylorn West area across 30 levels of development. We'll be bringing all of this production profile forward by a full 12 months. Very rare that you'll see somebody bringing things forward in mining. Generally, they're pushing things backward. Our resource update, this is our current resource across a 5.5 kilometre footprint. The grey areas you can see are the historic production at this asset. This is a de-risked brownfields asset. Produced 4.2 million ounces at 17.7 grams per tonne over a 40-year production period. The project's been closed for 50 years but still holds the position as the largest, highest grade producer in Western Canada. So this project has a lot of pedigree. What we've developed is resource in between the historic production, nearly 1.7 million ounces, but we see a lot of upside. The dots that you can see are drift levels. So that's old development every 50 metres, sampling every 2.4 metres. The red areas are samples that are above 15 grams per tonne. The purple are above 20 grams per tonne, so very high grade. We believe below this that we've got potential to add another 5 million ounces directly underneath where we're currently mining. Our long-term vision, though, is to develop a district. And we've consolidated this entire district across a strike length of 33 kilometres, 15,000 hectares of land ownership. There are 47 historic producing vein mines, some of these with existing resource. Congress in the north, 186,000 ounces at 9.1 grams, just drilled to 200 metres from surface. We drilled BRX just to the north of our mine complex in gold, received an 11 ounce intercept in our first drill hole. So our long-term plan is to invert our current strategy of toll milling, to build a second mine and our own mill through cash flow, develop satellite deposits and truck them to our central facility. So a very compelling value proposition. We're strongly capitalised. We don't need any more capital. We've got access to $70 million to build this company. It was low capex to start at with our strategy of using existing facilities, using metal traders to sell our material. Very strong initial resource base, 1.66 million ounces, a top 5 in grade in Canada. We're adding another 800,000 to 1 million ounces, and we see pathway, low risk pathway to get to beyond 5 million ounces. And a growing production profile, initially developing to 100,000 ounces by 2027, and then doubling that production profile by 2029 to 200,000 ounces and achieving our vision. That's Talisker Resources. Thank you.
Thank you, Jerry. We have any questions? We have one in the back. One in the back corner. There you go. Okay, go ahead. Shh. Sorry, guys. We can't hear.
Yes, compare it to. Yes, it'll. We expect it'll bring our AISC down to 1,100 US. Oh, we're in the first phase, so it's quite high at the moment. We expect in 2026 it'll be about 1,400 to 1,500 AISC.
Go ahead.
When can we expect production data from Mustang for October?
Within the next couple of weeks, I would say. Yeah. It seems to be that the warrants are trading between 75 and 80 cents. So it looks like it's been very successful. It allows, certainly remove the overhang since we listed those. So it isn't seen as a cap. Our share price has blown through that, really up to, went up to $1.80. So probably best to ask our shareholders in that sense, but certainly the warrants trade very well. So I think, yeah, it was a successful outcome.
What was the rough cost of doing that?
Cost to us?
Yeah.
It was a very minimal cost. I think you need to have 1,000 shareholders that basically take it on. So it's organising that takes a bit of time. But really the cost is quite minimal.
I hope other juniors paid attention.
Yes, it was a good outcome.
Okay, we're actually out of time. Terry is probably do you have some open slots in your meeting schedule?
But I do later
Perhaps,
today.
or you can hand them out the door. We have our lunch break. I'm meant to tell you there's a lunch right outside this door and another set up on the other side, and feel free to pop into the meeting spaces for a place to eat. Thank you so much for joining us this morning.
Thanks, mate. Well done.
Yeah, thank you.